Okay, dear students. Now let us have a discussion like a case-based study on measuring and forecasting device. So already we discussed a topic called as this measuring and forecasting. Is it measuring for today, forecasting for future. So whenever we need to earn some money or whenever we need to start a new business, we should not think only for present. We have to think about future also. Okay. So same way, let us have a small case now. You know that is a company called as Sun's Beverages. Okay, beverages. So where a product called as ready to drink iced tea. Okay, so that is a product. So where they are planning to operate in several cities across India. Okay, so imagine like this, and let me give values. Okay, like how we are going to calculate. So the demo we have to work on. So imagine that revenue, it's all assumption, right? So revenue is 200 crores. Okay. So assumption basis, I am telling you revenue as 200 crores. So operating cost, again we assume it is 150 crore. Okay. So since so many branches they are going to operate, right? And next is interest on loans, that is 5 crore. Okay. And tax rate is 25%. Okay, so I said about revenue, operating cost, interest on loans, and then tax rate. So these are all the data which is what given for us. So we need to calculate now operating profit. That is earnings before interest and taxes. Okay, so what is our revenue? Just leave the crores. Take us 200 minus, we should minus this operating cost, that is 150. So 200 minus 150, that is 50 crores. So 50 crores will be our earnings before interest and taxes. Am I right? Right? So next, profit before tax. We do that calculation. Profit before tax. Okay, that is EBT. Can we say this is EBT? Okay. So earnings before tax. So just now we get the operating profit as 50 crores. So 50 minus, what is the interest? 5. Interest on loans as 5, right? 5 crores, right? So 50 minus 5, 45 crore. This is our EBT, earnings before tax. Again, now we are going to calculate net income. Net total income, final income, that is 45 we got, right? So 45 minus, is there any other data? Tax, 25% of tax. So 45 minus 25% of 45. What is 25% of 45? Can you do that? 11 point? Okay. Now subtract from 45 minus 11.251. Okay, what's the answer now? 33.7. Right, 33.7. Nothing like you are doing like 45 minus 25% of 45. Since tax data is given here, so 33.75 crores is for the net income. And here we say this is 34 crores. Clear? So now this is the present earnings. Then how to find out or how to build forecasting the earnings for future. Okay, let us assume we are planning to grow, sales is planning to grow for 15%. That is first 15% sales is going to get a growth condition. Next is, obviously if sales is not growing, cost on the other side, cost is also growing. Okay, that is for 10%. And next is interest, it remains unchanged as 5 crore, as I said before. And next is tax rate is also 25% as before. Okay, so only thing is, two things are going to happen for future. One is sales growth, another one is cost growth. Okay, now what will happen? Again, we need to calculate revenue, cost, all these things for the next year. I mean, we are forecasting for future. So revenue Sales is going to grow for 15%. So 15% of 200. What is the answer? Plus, add this revenue, 200. 230. So 230 is the revenue forecast we did for future, next year. Again, operating cost. I said operating cost is going to increase for 10%. So 10% means 150. 10% for 150. Okay. So plus 150. So you'll be getting us 165. Okay. So 10% for 150 plus that answer plus 150 will be getting us 165. So these are all the changes that we need to face. So now the entire forecasting net income will be 45. What is the previous year? 34, right? So 34 is the present. When we need to do the forecast, now you forecasted something, sales is growing, cost is growing, so all these things are happening. Now forecasted income is what? 45. So this is the way to calculate forecast. So measuring and forecasting income on some case basis. Alright? Thank you.